A. So I want to summarize the whole variance to you. Then after that, we'll take that question, we just summarize it, because it's like I was rushing yesterday because of case study. Okay, so now, like I said before, variance is into 3 steps or 3 stages. We have basic variance. So under basic variance, you are expected to get sales variance, to get material variance, to get labor variance, to get overhead variance, and to get fixed variance, fixed cost or whatever. These are the 5 variances you can see under basic variance. Do you understand? Now, these variances we have now, if we start with sales, sales is divided into 2. Majorly, we have price and we have volume. Price and volume. Now, if they want to further disturb you, this is normal. This is normal. Okay, don't let me go anywhere yet. This is basic. This is where the end of basic variance for sales. This is where it ends. So you just calculate price and volume, and that is the end. Then if you want to calculate material, material will also be price and usage. That is the end of price of material. If you want to calculate labor, is rates and efficiency. And that is the end of it. If you want to calculate overheads, it's also divided into 2, rates and efficiency. So it means labor and overhead are very close, because every time labor and overhead is always absorbed on labor hour. So we always use labor hour, but the only thing that will be different is they will give you overhead rates and they will give you labor rates. It will be different from each other. Then fixed variance is also divided into 2. Expenditure. Are we sure there is volume here? Volume. Then the volume is divided into what? Capacity and efficiency. So volume. This is where basic variance ends. This is where basic variance ends. So we may not be solving anything under this. We may not be solving anything under this. Okay. When you now go to advanced now, don't forget under basic, every information they are going to give you will be single. One product, one sales, whatever. One product to sell, one material, one labor. If it is skills, they will not mention, they will not divide it if it is skills or non-skills or whatever. It just be one labor. But once they take you to advanced variance, that's where you're going to see sales will now be divided into price, volume. This volume now will now be further divided into 2. We have mix and we have quantity. Mix and quantity. That is when it becomes variance. Now, with some question like lab diet, they may not call it mix and quantity. Then I can as well call it market share and market size. They are just talking about the same thing. Addition of these two will give you volume. Addition of these two will give you volume. Are we good to go now? So that is that. After this, for material. Material is also divided into price and usage. Now, this usage again can be further divided into two. We'll call it mix and what? And yield. Mix and yield. And what you need to know about mix and yield is that anytime there is loss, maybe 5% loss, 3% loss, or whatever loss they mention, the loss is always on what? On yield. It will not be on mix. The same thing to the sales. It will always be on quantity, not on what? Not on the mix. Are we good to go now? That is the end of material. Now, we can actually come to labor as well. Labor can also become advanced. So we have labor rates, and efficiency. Now, efficiency can now further divided into two. We have idle time and mix. Mix and idle time. You can also divide it into two levels. That is for labor and the material. Now, after that, we have the last one. The last one is, okay, we have not done the overhead, have you? So overhead, also divided into two. It will also be the same thing as labor. So don't let us bother ourselves like that. It will be the same thing as labor. Efficiency also will be divided into two. And like that. So let's go to the fixed overhead variance. Fixed overhead is divided into expenditure and what? And volume. Then this one is now further divided into two. We have capacity and what? And efficiency. Capacity and efficiency. So which means addition of this will be equals to volume. Now, under this fixed overhead, they will always give you what we call absorption rates. Absorption rates. If absorption rate is not given, you will need to calculate absorption rate yourself. And to calculate absorption rate yourself, all you need to do is that it's going to be based on actual production. The actual production here. But the two will be based on hours. It will be based on what? On hours. They will be dividing it by hours to get the actual rate. But when they are talking about volume, it will not be divided by what? By units. Divided by units. And that is all summary I can say about this. So I'm going to take last diet question to solve. Just little we can solve now before the time. Then the sales. We can also, we've done the advanced. So the third part is the operational and plan, which we have done at the beginning of this class today. So it means you can just go and study your basic variance and operational, because I'm suspecting this the either operational or basic. The tested standard, I mean advanced last diet. So they may not test it this diet if they want to test variance again. And I cannot predict them. You just see that they will just repeat the same question. People will now be shocked. Ah, they repeat, sir. They repeat, sir. They repeat. Okay. So let's go to last diet question 1. We have done this yesterday, but let me just recap. Last diet question 1. Advanced variance. Advanced variance. Okay. It's still the same material we are using. Where did I put that material in? You can take a swim. So I believe you all have it on the group. I think I've sent it to the group already. Okay, so question 1 of last diet. They say Kayode PSC, Kayode Limited manufacture and sells the products XW, which is widely used in the construction industry. Although XW and competitors' products have sold well for many years, KL believes that products of this type are now reaching the end of the life cycle. Because of the concerns about their long-term environmental impact, KL has adopted a strategy which is designed to achieve profitability for XW, in what the company believes will be for the short remaining product lifespan, as whatever. So they gave us information about the only variables cost of manufacturing whatever raw material. We have shown the standard variable cost of manufacturing 95 kilograms of this. Material A, material B, material C. The total raw material input is 100 kg and the normal loss is 5 kg. So which means the normal output they have is 95 kg. Last month, KL produced 19 kilograms of X, whatever, and sold this for 365 per kilogram, 368 per kilogram, 18 naira per kilogram higher than the budgeted selling price. The actual sales quantity represented a 30% market share and was 5% less than the budgeted sales quantity. When KL was preparing the budget committee assumed that the companies will have a 25% market share. The actual costs of the raw material purchase and used last month were as follows. So they are giving us actual information now. Now, prepare or determine KL's budgeted and actual contribution for XW for last month. Then carry out a variance analysis to reconcile the budgeted and actual contribution in as much detail as possible from the information provided. B, critically evaluate the success of the strategy adopted by KL in relation to XW. Justify your answers, having regards to the particular phase of the product life cycle and wherever. Now, the first thing they ask us to do is budgeted and actual contribution. So it means the first thing to get here is the budgeted contribution and the actual contribution. By the time how are we going to know there's a discrepancy or there's variance? It's by comparing the budgeted contribution to actual contribution. So if budgeted is 50 and actual is 20 or actual is 30, it means there's a variance of what? Variance of 20. We now start calculating the variance to know what and what cause this particular variance. So from here now, we need to determine I'll put it this way. We need to determine the what? The budgeted. So we start with selling price because our focus is to get contribution. And contribution simply means selling price minus variable cost. So the selling price here is not given, but the selling price here was given. How much? How much is the actual selling price?
368.
Eh?
368 now.
So 368 naira. 368 naira. 368 naira is the actual selling price. Actual selling price. But now we want to determine the selling price for budgeted. But they said it was
18 naira per kilogram higher than the budgeted.
So it means this figure is higher than the budgeted by what? By 18 naira. So which means our budgeted selling price should now be lower by this. So it means 368 minus 18 naira. That will give us what? 350. 350 is our selling price, budgeted selling price. And the actual selling price is 386.
Sorry, please. Where did you see 368? I can't find it in the question.
Under additional information.
Third paragraph.
They said third paragraph. Third paragraph. After budgeted information. Are we good now? So this is settled now. This is settled. Now, we want to get our what?
Sir, sorry, sir. Sorry. Which question are you treating now, sir?
Can someone help me answer the question?
November 2024, number one.
November 2024, last diet question number 1. So in case they may repeat it, they may not repeat it. They may bring something similar. So anyhow, we are just trying our luck so that we know that we have done justice to it. Now, we have selling price for both. Our focus is variable, is contribution. So it means we need to get our what? Variable costs, and we need variable. So to arrive at variable costs, under the budgeted, they have given us the total variable cost. What is the total variable cost? Under our budgeted. And give us total.
Variable cost is 95 kilograms.
So total variable cost is 19,000. Total variable cost is 19,000. Can you see that? Yes. Total variable cost is 19,000. But this 19,000 you are seeing is based on the 100% material they put. Do you understand? However, there is a loss of 5% that is not supposed to be captured. So do not say, okay, that has not been captured, sorry. This is it. If you look at the top of the project, at the top of the statement, They said this statement was prepared at what? At 95 kilograms. It means all this information you are seeing there, they are at 95 kilograms. Do you understand? But we cannot throw away the 5 kilograms that was wasted. It's already part of the cost incurred. So we need to gross this thing up to 100%. Since we know the 5% is missing, so we just say divided by 995 kg or just 95. What do you get if you divide it by 95? Or 0.95? What do you get? How about 90? How about 95? I think it should be 95 kg then. 200, yes, it should be 95. Because if we put 20,000 here, it's more than. So it's 20,000. I mean 200, I mean. So 200 is our variable cost here. This 200 now is per what? Is per kg. Do you understand? This is per kg. This is also is per what? So it means 19,000 for the whole 1995. You want to know price per one. So price per one is 200. Then we need to get for this one. What is the actual? Do we have actual? Okay. What is actual? Yes. Or you may leave this one like this. It's like they don't give us per kg. They gave us the total for the total. So let's say total variable. What is total variable here? Okay, 4. Let me just put it. 4 what? 105. 1,000. So let's put 1,000 here. So it means this one, they sold 386, I mean? 368. Times how many units did they produce? 19,000 kilograms. How much do we have?
Nine 9,000.
Yes, 1,000. Do you understand now? This one is per unit. This one is the total. Because
Sorry, sir.
Yes.
Sorry, please. I just did that clarity. The 19,000 kilogram. How did we get it? This.
The question. That is actual production.
So that's 19,000 naira. Okay, actual production. Okay. Thank you. I understand. Thank you.
All right. So the total variable cost now is this. So this is total contribution. What's our contribution now? When you less it. $2,887. 2,887 is total contribution. But this contribution you are seeing here, which is 150 naira, is per kg. But we need to know how many budgeted units do they have at the beginning. Do you understand? So the total unit they produce is what? They produce 19 kg. 19,000 kg. That's what they produce. But because there's a loss, and that loss was not included in this case, we need to cross it up to know how much do you actually budget for at the beginning. Since you are going to have 5% loss or 5 kg loss, so now we can now cross this up now to 95 this. If you cross it up, what do you get?
That's 20.
So that is 20,000 kg. They budgeted for 20,000 kg, but because of loss of 5 kg, they only have output of what? 19,000 kg. So now we will now multiply the total contribution here will now be 150 multiplied by 20,000 kg. What will now be our total contribution? $3 million. 3 million. So 3 million is the what? Is the contribution, projected contribution. 2,887 is the actual. Now, we will now compare projected and actual. 3 million. 2,887. What is the difference? The difference is what we call variance. What is the difference? 113. 113 is the variance that we have here. Which means that by the time we start calculating all our variances, we will have this particular figure. We will have this particular figure. So let me quickly, I have 30 minutes to go, so it should be enough to settle this question. It should be enough to settle this question.
Sorry, please, how did you, where did you get the 150,000, 150 naira, sorry?
350 minus 200.
Okay, all right.
I've claimed. Don't worry, we can snap it. So now let's now go to all the variances that are possible to get in this regard. All the possible variants that we can get. Okay, so because in this question we have both material, there are just two items there. We can only see sales and what? And material. So it means the only two variants you can calculate here is material and sales. There's no labor. So there's no how you can calculate labor. There's no overhead. There's no how you can calculate overhead. There's no fixed cost. There's no how you can calculate fixed cost. So let's start with material. Yes, but we now have three different types of material. Now, because we have three different types of material, it means it is an advance. So we cannot just say we are going to do price and what? And usage. It will not work. We need to go beyond usage. So it means we are going to be doing what? Mix and use to replace the usage because it's an advanced material. So you say, let's start with material. We'll start with price. So for price, it's simple, it's standard price minus actual price multiplied by actual quantity what? Purchased. Actual quantity purchased. So in this regard now we have what? We have A material, we have B material, we have C material. So for A material, what's our standard price for A? 160. What is the actual? 165. Then for B, okay, what is actual production, actual quantity purchase for 98? Then for B, 180 minus 175, quantity 6,800. Then for C,
280,
280,
95,
295,
4 out of 1.
4,400. Simply, what do we have as variance? For 9,000. Okay, it's going to be adverse because actual is more than standard. The second 34. 34,000. 66,000. This will be favorable because the actual is less than, it's less. So favorable. This one will be adverse because that one is bigger. The difference is what? 4966 minus 34.
81,000.
The standard price,
81, sorry.
because if we sell more than the projected price, we make more profit. So why is that?
It's material, it's not sales.
The material price.
It's cost. When you get to the sales, you cannot follow what you're saying. You understand? So, okay, so it will be 81,000 adverse. Adverse. Okay? That's it. Now, we now go to the usage. We go to the usage. So the usage now we have what?
Mix on
We have mix. We have mix. So we cannot use usage, Abby. You can say material. You can still use usage, but we just have to replace it with mix and yield. So now for mix now, we need reverse standard quantity minus actual quantity multiplied by standard price. Reverse standard quantity minus actual quantity multiplied by standard price. Now, to get the reverse standard quantity is only the problem you can face here, but it's simple. What it simply means is that you will have A, you will have B, and you have C. You look at it, what are the material? What are the kg per material from given questions? Yes. No, from standard.
from standard, 50 kg,
So we have 50 kg,
30 kg,
30 kg,
20,
and 20. Addition of this gives us what? 100. And that is the 100 they are talking about the kg. But we want to spread this based on the actual material they use. We will not say, okay, we need to find our actual material. And actual material used is what? From actual. I think this one. No, this is price. Yes, this is actual now.
yes,
So 98 plus 68 plus 44. What is the total? So
21,000.
So 21,000 kg. We now want to spread this 21 into all this material for us to get the reverse for each of them. So anytime you see reverse standard quantity, this is what you must do. Anytime you see reverse standard, or anytime you see mix and yield, or anytime you see quantity and volume, or quantity and the mix, do you understand? They must be reversed. And this is what you are going to do. So it will now be the 50 over the total, which is 100, times what? times 21,000, whatever you get. Then 30 over 100 times 21,000, whatever you get. Then 20 over 100 times 21,000, whatever you get. What do we get now? For first one, what do we get?
The third one is 4,002.
The first one is 10,500.
Okay, the second one,
6,300.
6,300.
1,300 kg. Then the last one,
4,200.
4,200 kg. All these things is what we call the reverse standard. These are the reverse standard. Reverse standard quantity. Those are the reverse standard quantity. Okay, we have been able to get our reverse standard quantity now. We now need to what? We need to apply the formula. Which means that our mixed variance is reverse standard quantity minus actual quantity times standard what? Price. Then for A, what's our reverse standard for A again? 9, 10, 5. Then for B, 9 something.
6,300.
6,300. Then for C, 4,200. So what is our actual now? Our actual quantity?
9,800.
9,800. This will be 6 something.
6, 8.
And 4,
And 4, 4.
Our price here 160. Am I right?
Yes. 180.
80.
280.
What do we get now for variance?
The first one is 11,000. 112,000.
Like this, are we?
Yes, in zeros.
Okay. So B part
9,000.
90,000 and C part 56,000. So we need to know if it is very adverse or favorable. This is actual now. This is before actual. Abi, favorable or adverse?
It's favorable.
It's
It's
favorable.
favorable.
You use less, Abi.
Yes.
Then higher.
Adverse. Adverse.
This one adverse. We use
Adverse.
next. Ego level.
$4,000.
34,000. That's what they asked you to. So we go to the yield variance. Yield simply means budgeted quantity, am I right? Minus reverse standard quantity multiplied by standard what? Standard price. Multiplied by standard price. So everything is ready for us. We'll have gone like this. But because there is a loss, we won't be able to go like this. There's a loss of 5%. Don't forget, loss will always be on the yield or on the quantity. So because there is a, assuming there is no loss now, we'll just pick budgeted minus what we have gotten here, and then we move on. But we cannot go now because of the loss. So what are we now going to do? We'll say A, come back to 50, B, come back to 30. C, come back to 20. Total is what? Is 100. We will now less that loss of what? Of 5. The total will now be what? 95. So instead of dividing everything by 5, it means we want to factor in only 95 kg. So it will now be 50 over 95 times 21. Remember, oh, sorry. This will now be based on actual what? Actual production. The actual production is 19.
Okay.
So actual production equals to 19. They give us that 19 straight away now. 19 kg because we have used it before. So it will now be based on 19,000. Then this will be 30 over 95 times 19,000. Then this one will be 20 over 95 times 19,000. What do we get for this one? This one is 10.
6,000
6,000
and 4,000.
and 4,000. Do we get that now? So that is for that yield aspect.
So if there was no wastages, how are we supposed to treat it if there was no wastages?
So assuming there is no wastage at all, you just pick the budgeted. They will give you information about the budgeting. Do we understand? And don't forget, anytime you are working on budgeted or you are working on the efficiency or usage, it will be based on actual production. So you now calculate the way we solve under planning and operation. You now be multiplying it by the production, by actual production. So the actual production will give you the breakdown. Then you now compare it to this result.
Sorry, just for clarity, what we just solved now, is it not reverse standard quantity we just solved, or is it budgeted quantity?
It's budgeted, not reverse.
Okay. Thank you.
So we have A, we have B, we have C. So what is our what we just calculated? I think 10,000, I think. For reverse, that is 10,500. This one is 6,000 arrest. Minus 6,800. Then this one,
No, it's 6,300.
oh, sorry,
6,000 minus 6,300, yeah.
6,003. Then this one should be 4,000. Is that what we get?
Yes. Minus 14.
That's 4,200. Okay, fine. So what is our standard price? 160, 180, 280. Ego late total.
80,000.
What is it?
80,000, first one.
80,000 for the first one.
54,000,
54,000.
54,000,
Okay.
and 56,000.
And 56,000. So we have this is budgeted between budgeted and reverse standard and reverse quantity. Which one do you think it will come first or to come last? Which one come last? The budgeted should come first, Abi. So it means budgeted is standing like a standard. While the reverse standard quantity is standing as a actual now, Abi. So now let's look at it. Is it adverse or favorable? Adverse, because this one is higher than this. So this is adverse. This one
All
adverse.
of them. Adverse.
All of them are. Thank you very much. So when you add everything together, what do we get now?
190.
190. 190. Okay, so we are done with everything concerning the material. But if you want to test yourself if what you have done is correct, though they don't ask you, but if you want to test yourself if what you have done is correct, you now calculate material usage. Your material usage should be equal to this plus this. This is adverse. So let's calculate the material usage just for checking sake. So let's say usage. Usage will be for A, for B, and for C. You know, to calculate usage, you need what? You need standard price, standard quantity, minus actual quantity multiplied by standard what? Standard price. Yes or no? But your standard quantity, anytime you are working on usage and efficiency, must be based on actual production. So we are coming back now. How much is the total production? 19,000, Abi. So it means it will be 19,000 multiplied by how much is per kg there? How much is per kg they are using there? Of A? No, 0.8 something. Okay, that's 50 kg.
Yes, for budget.
Yes, 50 kg. 50 kg per one. So it means this one will be multiplied by 50 kg. What is the actual?
You get 50 kg.
What is actual kg? No, on that actual.
Is the standard quantity used in kilograms? That's how I got 50.
Okay, for material A.
Yes.
Okay, thank you.
What about actual quantity? What's actual quantity for A?
9,800.
9,800. 9,800. That is actual quantity, Abi. Kg. Do you put kg there? Did they put kg there?
Yes, there's kg by the side.
Yes, correct. So 50 kg multiplied by actual production. Yes, the actual production for each of these. I think we have calculated it before. What is actual production for? You know, we have spread that production into 3 places before. Okay, where we use 19 under budgeted quantity. Yeah, so what do we get?
6.
10,000. So we don't need to do this again. You can just remove it. 10,000 what?
10,000.
10,000, 6,000, 4,000. So if you now compare it with, I think I should remove this. So this will be kg now. For B, what do we get for B? 6,8. Then for this one, 4,4. What is our price? Standard price remains 160, Abi. 116, 180, 8. Yeah, can we add them? Can we multiply everything together? What do we get?
Excuse me, sir.
Excuse me, sir. Yes, what do you say?
Okay. Why are we not using this 5,400 and 5,600 on the budgeted quantity?
Price now. Is it not price?
It's not price, it's the quantity produced. Is it not?
It's price.
They put price there now.
Okay.
there. Is it clear now? So for A, what do you get for A?
Yes, it's clear. It's clear. Thank you.
32,000. Yeah, 32,000.
32,000. The second one,
144,000.
144,000. Then the slippers,
112,000.
11, 12,000.
Yeah.
Are they all adverse, or what? Yeah, they are all adverse, are they?
No, no.
Except the first one.
The first
first
one is not verse.
one
Yes.
is favorable. Abi?
Yes.
One is favorable. Then adverse. So what will be the total? The total is together.
124 adverse.
124.
224.
224. 224,000. 134 plus 190. What do you get?
34, not 134. It's the same thing.
Same thing. So it means
Yes.
224,000. That's how you're going to know if what you have done is correct. So addition of that will give you that. So you can check yourself, even though they don't ask you to do it, you can check it and see if what you are doing is right.
When you don't have time in the exam.
That is the end. That's the end of the. That's the end of the material. So how many minutes do I have more? This is supposed to end by 5, I think. Yes, so no problem. So let me quickly do the sales. After sales, I will now leave you. I think we have done our best. So we are expecting good results by God's grace. So now let's go to the sales part of the question. So for the sales is divided into 2 in this regard. If you look at it, sales does not have 2 products. They are only talking about one product, which is KL. I mean SW. So they are not talking about 2 products. So technically, sales is not a mix. Do you understand? So we can only calculate sales price variance, which is what? Standard price or standard selling price minus actual selling price times actual quantity sold times actual quantity sold. So what is the standard price in the question? Standard price in the question? 350. Yes, you are right. 350 minus 368, I mean. How much is the actual quantity sold? 19,000. Yes or no? So let's go there for the total. That will be 18,000 times 19,000. I mean 18 naira times 19,000. 342,000. Adverse or favorable? Favorable. That is what he has. Because it's a simple variance. It's not more than this. It's not more than this. It's not more than this. Now, the second one we should have done is sales what? Sales volume. But in this regard, if we are to calculate sales volume, we don't know the budgeted quantity. I think we know the budgeted quantity now. You know, to calculate sales volume, we need budgeted quantity minus actual quantity multiplied by standard profits or standard contribution. Do we understand? We need standard profits or standard contribution. But in this place now, they did not tell us anything about the profits or the standard contribution per unit. So we won't be able to go this route. But they give us alternative information. If you're not using mix and yield, I mean, if you're not using mix and quantity, they can actually use the other way around, which is shares, market shares, and market size. Market share and market size. So we won't be able to use this one. We will now go to the other route. Yes, that contribution. Yes, we can actually go. We can also go that route too. We can go that route too. What is that contribution? 150. So 20 minus 19 multiplied by 150. What do you get? Let's put the figure somewhere. Yeah? 250. 150,000. That's what. Okay, so 150,000. Favorable or adverse? Adverse. Yes or no? Because we budgeted 20 something, we got 19. So that is 150. But because they gave us information in the question, and like they mentioned what we're supposed to calculate. Did they give us what we're supposed to calculate? They did not give us.
Carry out a variance analysis to reconcile the projected amount of traffic.
Okay.
As much detail as possible from
We know the figure we are looking for is 113 at the beginning. 113. How much is our material? The first material. The total. No, what we calculated. No, we got in material. What do we get for total price, material price for the three products?
81,000.
81,000. For the whole
Yes.
three,
Yes.
21.
81. 81.
the price variance you are asking for.
Price variance.
Yes.
Yes, it's 81,000 adverse.
1,000 favorable adverse.
Adverse.
How about the usage or the mix? Let's say the mix. This is price. The mix. 34,000
Yes, adverse.
adverse. How about yield? I mean, is it yield? Yes.
Yes. 190. 190.
190,000
Adverse.
Then this one is what? It's also adverse. So there's no favorable at all. Is there anything like favorable?
No.
There's addition of all these three gives us what? It's like there's one of these that is favorable.
No, there isn't.
So we have sales. We have sales to be 134. Or let me say 342,000. Abi, why we still have another one, 150? Yes or no? So add these three, add all these four together. Add these four together.
4, 5, 5.
1, 2, 3.
You get 113. You get
No,
113. If you add all together and you minus, you get 113.
1,000, Abi. This is adverse.
Yes.
This one is favorable, Abi. So if
You get
less,
113.
okay, we get that 113.
Yes.
So addition, difference between this and this should give us 113. Does it give us?
Yes. Yes.
We already know our answer. So we can also actually reconcile now, even without going through the share, whatever, and market share. So in the exam, if you are hanged somewhere and you don't know the other way around, just follow the one you know and you are good to go. But let's do the market share so that it will be advantages to you.
Okay, sorry, please, before you do that, please just teach us this short method again. That what you just did, no, 20 minus 19. Sorry.
Okay, so are you saying, so should we do our reconciliation here? Then I will not do the share later. Okay, well, let's do our reconciliation. Okay, but you have not done the volume. Let's do the volume. Sales volume. Sales volume is actually the budgeted quantity minus actual quantity times standard contribution. Standard contribution. So in this case, our budgeted quantity is already 20,000. I believe we know where we got that from, beginning. Then minus 19,000 kg multiplied by 150,000, which is our standard contribution. So 1 times 150,000, that will still give us 150,000 advance. 150,000 advance. So it means our reconciliation that they ask us to do will now be budgeted what? Budgeted profits. Sorry. Budgeted profit. How much is our budgeted profit? 3 million. I still remember, Abby. Then all these variances we have calculated, starting from sales. Sales price. We have, let me expand this more. So we have favorable and adverse. So for sales price, I think we got 134 or something. Am I right? Okay, yes. 340,000. Because it's under favorable, we put it under favorable. Nothing is coming here. Then we have volume, Abi. Sales volume. Sales volume will be 150, but it's adverse. So it will be under adverse, 150,000. Are we good? Then we have material. Material price. How much is our material price? Material price.
It's 1,000 advance.
Advance. So it will be 81,000 advance. So nothing is coming here. We have material
Usage.
material mix. But if you like, if you put material usage now, you don't need to use mix and yield again, because addition of the two will give you this. So material mix, what is material mix?
190.
Just say this one, we must calculate that information given to us.
So I'm saying that if you go and calculate usage instead of this and this, how could not be penalized for that?
I will advise you to do the
Right.
do the mix and yield. You understand? But if you are hooked somewhere and you don't know what to do, just find the volume, find your way back to volume. Use volume. If you are not sure of what you have done, as long as it is reconciled, you will still take it. Okay. So what is mix now?
34,000 adverse.
35,000.
34.
4,000 adverse. After mix, I think that's all.
No, yield.
Yield is what?
190. 190.
190 adverse. That's all. So this give us total of 342,000. This give us 4 something.
455.
4,500,000.
55.
So the difference between this and this will give us 113. Yes.
113, yeah.
113,000. So 113,000 minus this, it must give you the actual profit you have gotten. Actual profit. And what is our actual profit?
2,887.
This is reconciliation they ask you. But that's not the end now. So because we have to do the normal, we need to do the normal sale, market shares and what do we call it? Market size. So I'm already spending more than my time. 8 minutes is out. So let's quickly do that one. Let's quickly do that one. So now that you know this now, you can actually go back to that question 4 in this last diet as well. So look at it very well. You should be able to attend. As long as you see reverse there, or as long as you see mix there, you must use. Is it question 3? So it's 20 marks. So you must make sure you know you use that. Okay. But this their formula. I think I dropped the formula on the platform yesterday also for the market share and stuff. Okay, so for our market shares, people of God, I gave you the formula last time. We have market size. We have this. We also have market share. For market share. Oh yeah, I want to know. For market shares, what do we have? For market shares and market size. Industry what? We have the industry sales divided by the shares. Now this is the market shares. It might be in percentage or whatever. Yes or no? Then you can say the shares, the market share, percentage. Okay, sorry, actual market share percentage minus budgeted shares percentage, multiplied by contribution per unit. Contribution per unit. Can we see that in the question? Can we find it in the question? So let's interpret this now. If you are interpreting this one, what do we have? The industry sales is 19,000. Then the shares we are talking about here is 30%. The 30% is the shares. So it's going to be 19,000 divided by what? 30%. Then open brackets. What is the actual market shares here? Or are we not getting the formula right? That is industrial minus actual market size. We are right, projected, and then contribution. So we are right. So yeah, now I'm with you. What is actual market size in the question? 30%. Yes or no? So this is 30%. 30% minus 25%. I hope we know where we are getting this figure. Then multiply by contribution by what? Contribution per unit is 150. What do you get when you calculate this? What do we get? You have to do the inside first. And the one you want to do with 19 must be percentage. So that you'll be able to get your answer correct.
That's 475.
475,000. Now let's look at it adverse or favorable. Adverse or favorable. Your focus is always where you are comparing. It's where you are comparing the actual shares to what? To budgeted. Because this is budgeted. So it means this is a what? Favorable or adverse? It's adverse. I mean, it's favorable. Do you know the meaning of market shares? Customers. You have, at the beginning, you said, I'm going to have 25% customer. But at the end of the day, the actual, you got 30. So it means you actually got more than what you expected. So this is a what? It's favorable. This is a favorable. That is market size. Market size. Okay, so the second one is the market shares. I mean the market size. Okay, this one should be market shares, sorry. Because we are comparing the shares together. So this is market shares. This is market size. By the time we are done, by the time you add this and this together, it must give you that volume. It must give you that volume. What is our volume again? 150, Abby. And so it must give you that 150. So let's write this one out. So for this one now, the market size will now be projected market shares multiplied by projected market share. Projected market shares. Projected market shares multiplied by this industry sales now, industry share now. It will be industry sales shares or industry sales over shares minus, okay, let's call this one projected, minus actual industry sales over shares multiplied by projected contribution per what? Per units. So from here now, what is our budgeted market share? Is 25%, right from here. So this is 25% times open brackets. Industry sales. This is budgeted. The budgeted is what? 20,000 kg. What is the market share? 25, Abby. The budgeted, no, budgeted 25% minus actual 19,000 kg over the shares 30%. Then multiply by contribution. What's our contribution? No, contribution, budgeted contribution. 150. 159. But you are able, lady, to do the one inside first. So which means that this one will be 25% times, do this one, then whatever, do the middle first, whatever you get, then we multiply it by 150. And we are good. That will be the end of it. You have done everything. Okay, so can you get the middle first so that we can 80,000. Then multiply by 150, Abby. So every give us.
I gave you the figure for this one. 20 over.
Okay, you gave me only this one for this, Abby. So this one is 80,000, Abby. How about this one? 63.
Yes. 333.
You mean this one?
Yes.
6333.3. Abby? Okay, 13. So which means
How is 100? How 20 kg divided by 25?
It's 80,000. This one
Is 80.
33.
okay. Are we right
So
now?
if you minus them, you have 16,666.67.
16.
666.67.
0.67. Then multiply by 150, the contribution. So now what is now the total? Is it correct? 625,000. We need to determine if it is adverse or favorable. This is actual, this is projected. It's adverse, Abi. So the first one is favorable. The second one is adverse. So it means the difference between the two will give us what? 150. So 150,000 adverse, Abi. That shows that if you compare it to our volume, we will be getting the same thing. So that is why that one is like that. So if you now want to do your reconciliation again now, where you put that volume, you not put volume any longer. You now divide it into market shares. The market share will be 475,000. The market size will be what? 625,000. By the time you do it, it will still give you the same impact. Do we get it? Or you still want me to do it on the board? Online. Are we satisfied now? Online.
Yes, we are. Thank you.
All right. So this is where we are going to stop. I want to wish you a very good luck. Please make sure you read. But this time now, you're not supposed to be sleeping. No. You find a way to hide yourself and read. You can find a friend for synergy so that you can read together and put more strength into it. So good luck and thank you.